which has come in the negative, in the negative territory for the 6 months.
So we've got 6 to 7 models, which are also creating excitement and walk-ins, which we expect.
Market's absolutely flat. It's a 6-point gain that we're seeing in the Nifty.
Well, that was a day so far. You're with us here on a fresh new edition of Closing Bell. This is the last hour of trade. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Mangalam. Guys, hi, good afternoon.
Hi, this is quiet as quiet can be, right?
It's quiet. It's Sannata.
Well, it's Sannata if you're looking at the frontline end of things. If you're looking at the broader markets, it's not quite quiet. In fact, if you're looking at FNO, then you would say, okay, there is some action. But if you look at the cash market, there's so much which is happening. Yeah. Even now, as we speak, we have almost 1,800 stocks in the green, but about 1,200 in the red.
You took away my thunder. I was going to say it's so quiet. That's why Mangalam is going to...
that's been a pattern. I've noticed this. Every time nothing happens, and I invariably find myself here on Closing Bell.
Well, we'll have some fun over the next 60 minutes. The market is, as Mangalam said, a lot happening in the broader market, but on the index level, it is absolutely flat. Nothing very much going on. Market breadth has been contracting all day, which is that the advanced decline has been... the two lines have been almost converging. Not yet. There's about 400-500 stocks still separating advances and declines. Mid-caps and small caps, that's what we were talking about. Those spaces are doing much better. 0.25%, 0.5% in that range on those indices. US futures are higher. And you also have European futures. I mean, last I checked, FTSE was up, but other European indices were not doing very much, flattish, right? Which is, of course, better as compared to the kind of day that we had on Friday. And this is the sort of thing which I think will be keenly watched. At the margin, and this is something we said in the morning as well, the fact that the US is now sort of making, at least looks like it's making diplomatic efforts to make sure that the conflict does not spiral out of control is a sentiment. I mean, it's a pretty bad situation where at the margin, you're always looking at the marginal incremental push or pull. And I think this is a bit of a positive. But market conviction remains extremely low, as you can see on the screen right now. And of course, across global markets as well, because the fallout, I mean, no one really knows. This is something which I think will determine what happens from here, at least in the very near term. Reema.
But it doesn't look like there is going to be a cascading impact on the markets because of what's happening. Unlike in the case of Russia, Ukraine, where we had far-reaching consequences on crude prices, gas. So far, at least, the reaction across the asset classes due to the Middle East conflict has been fairly measured. But getting back to our own market, the low today was 19,691. So that's going to be an important level for our markets to defend, on the way down. HDFC Bank has recovered from the day's low, but it's still holding in the red. And this one's going to be key. Reports numbers post-market as. IT after last week's weakness, especially on Thursday when we got those IT numbers, IT is actually showing signs of bottoming out. The Nifty IT index is up 0.5%, and in that, LTI, Mindtree, HCL Tech. HCL Tech was smart even in Friday's trade, but LTI, Mindtree ahead of numbers this week is holding up quite smartly. Auto is another sector where you are seeing buying. Mid-cap IT particularly is quite strong. So you've got Happiest Minds, Mastech over there surging in trade. Steel names are active. JSW Steel, Tata Steel, Hero MotoCorp is one of your big movers. That's gained nearly about 2%. On the losing side, you've got Nestle and Asian Paints.
Yes, we do. And in fact, Nestle, speaking of that, it was one of the big gainers on Friday's trading session. Citi had put it on its positive catalyst to watch out for. This week, on the 19th, we have the Avengers of FMCG reporting their numbers. It's HUL, ITC and Nestle. I don't remember the last time 3 nifty FMCG companies reported numbers on the same day. On the same day, yeah. Wow. The good part, however, is Nestle is the morning show. The midday show is HUL and late evening is ITC.
So nicely spread out.
Nicely spread out, nicely or not so nicely, it depends on the way you look at it. But talking about the market itself, you guys spoke about it to be absolutely flat. When it's a flat market, it's the option writers who make a lot of money because they write both calls and puts on either side. In the flatness of the market itself, a couple of things have happened. Today, the Nifty has surreptitiously recovered from the lows and conquered the 20-day moving average. The metals index is at the day's high. You were talking about the global markets looking good. The direct impact of that in India is visible in the metals index. The two stocks which will be in focus is Reliance, where we're seeing a lot of dips being bought. And secondly is HDFC Bank ahead of those numbers. So these two have the power of moving the markets. Nifty Bank has moved off lows, so that is something we need to watch out for post HDFC Bank results in particular. And the option positioning tells you that the Nifty Bank is a lot more bullish than what the price would have you believe. That's largely because the 44,200 put is seeing a fair amount of writing. The next congestion on the Nifty Bank comes in around that 44,600, 44,700 zone. So you do have more upside on the Nifty Bank than downside. And the Nifty itself, it's in a range. 19,700 put is extremely active and the 19,800 call is extremely active. So you're in the middle of 19,650 to 19,850 thereabouts. It is a flat market with a lot of positive bias and a lot of individual stocks doing well.
Well, absolutely, Mangalam, and point taken. So watch the bank Nifty, as Mangalam says, more than what the Nifty, at least over the very near term, over the next 60 minutes or so. How should you position yourself in the last 1 hour of trade? That's the question. And let's put out some trades. Mitesh is here to help us with that. Mitesh, hi, good afternoon. How are things looking, and will we see a move?
Good afternoon, Prashant. I'm not sure of that. I think, the markets, as I said, and Mangalam was also highlighting, 19,850, 19,650 looks to be the contours. We are somewhere in the middle of that. You might see a move within that range, but I'm not looking at a directional movement starting immediately, purely because volatility indicators are turning flat. They are also losing steam. So I think it will be a market which will be choppy, just like we have had during the day, but ranged. Overall, not going anywhere significantly. Having said that, on the stock side, I have a buy on National Aluminum. I think that's breaking out nicely after a few days of consolidation. So buy here with the stop below levels of 99, look for 106 as the target area. And L&T Finance, I think that's another stock which is possibly showing signs of restarting an up move. So buy here with a stop at about 133 and a target of 143 can be looked at.
Okay, thank you very much for that. The Supreme Court has rejected the telecom company's contention that license fee paid post-July 1999 should be treated as a revenue expenditure. Ashmit joins in with the details. Ashmit, first the news, the latest, and what are the implications for telecom companies now?
Well, first up, this is one of the legacy issues which, in fact, has been plaguing the industry. The industry has been seeking for clarity on this one aspect. The issue at hand simply is that the license fee that is paid on an annual basis by the telecom companies to the government, is that a revenue expenditure or is that a capital expenditure? That is at the heart of the issue, this entire debate that we've seen pan out over the last very many years. The implication, of course, is that depending on the classification of the license fee, either as a revenue expenditure or a capital expenditure, it will consequently lead to tax implications. How this affects the tax deductible income is the bigger takeaway here. Now, importantly, the telcos throughout had been arguing that this is a revenue expenditure. The department's stance was very clear that the mere fact that this payment is made via installments does not change the character of the payment in question and therefore continues to be a capital expenditure. Now, that issue has been decided fully and finally by the Apex Court, the Supreme Court holding unequivocally that this is indeed a capital expenditure and therefore holding this case against the telecom companies and in favor of what the tax department had been arguing all along. And the contention of the tax department has also been echoed by the Apex Court that the mere payment of this fee via installments does not change the character of the payment. It continues to be a capital expenditure and therefore has to be treated as such. That's one key clarification coming in. We now, of course, have to go back to the telecom companies, to the DOT and to the tax department to understand what the implications could be in terms of the tax implications. Keep in mind that this issue goes all the way back to 1999. The Supreme Court has clarified that since 1999, the license fees paid do qualify as capital expenditure. So it all goes back. It's certainly a hit coming in for the telecom companies. They had been batting against it. But now that the case has and the issue has been held against them, the issue goes back to the drawing board to get a sense of how far this will impact the balance sheets of the companies in question.
All right. Well, the degrees, of course, we will find out to what degree, but certainly not good news, as Ashmit is pointing out. And we'll try and get some more clarity on exactly that, which is what is the implication for some of these companies. It's an old matter going back to 99, as Ashmit pointed out. Thanks very much, Ashmit, for that. Well, the other one is Delta Corp. It's down sharply. Again, there is the tax department which is involved, demand notice of over 6,000 crore rupees. Mangalam?
It is the T word which has Delta Corp worried, right? And it's GST more than just the T. If you look at the way the stock price has moved over the last 6 months or so, just in June it was 260 odd rupees. In less than 3.5 months, it's halved from those levels. Why is that? Well, because in July itself, we had the big GST Council meeting where casino, horse racing, online gaming, all of them were taxed at the uniform rate of 28 odd %, and the tax implication on the face value of chips impacted their business as well. So from there, we saw the first wave of sell-off on Delta Corp. Thereafter, in September, just about 20 days ago, the company received tax notices worth nearly 16,823 crores. This is GST notices for the company as well as its subsidiaries. And now, over this weekend itself, the Kolkata GST office has sent notices worth nearly 6,400 crore rupees to them. So in a matter of 20 days, 24,000 crore rupees worth tax notices have come to the company. The company on its part has said that they are pursuing all legal remedies to challenge these demands and related proceedings, but the street does not like this tax-related imbroglio, right? Ashmit just spoke about an issue which was from 1999. We're currently in 2023, so 24 years later, the tax issue is still on. Will that happen for something like Delta Corp or not also is something we'll be watching out for. And on its part, the company's financials haven't evoked much confidence as well, because the second quarter, revenue, EBITDA and net profit absolutely flat. And then from a trading standpoint, in the last 1.5 months, the stock has perpetually been in the F&O band, virtually on a daily basis, barring 1 or 2 odd occasions when it came out, only to go back within a few hours. So when all these things happen, it leads to a big move, and this time around it's on the downside.
50% gone from its levels of 250 that it was sometime in June. Hemang Jani is with us. Hemang, do you have any view on Delta Corp, or is it just a complete avoid given the uncertainty?
Rima, as we all have seen how things have panned out in the last about 2-3 months, wherein the market cap of the company, the scale of operations of the company is too small, about 3,400 crore kind of a market cap, and about 250-275 crore kind of a profit, and the kind of figure that we are hearing about this tax litigation is running into tens of thousands of crores. So I think clearly there is going to be an overhang of how long this legal issue will go on, and there are ways to deal with it by paying a certain amount. But the fact is that it's overwhelming. So, it would be an avoid at this point of time, given the intricacy involved and the scale of amount involved.
What about fertilizer? Hemang, we're seeing a big move in fertilizer name. Fact is up 20%. GSFC has a double-digit rally. NFL has nearly gained close to about 10%. What is happening in this entire sector?
So I spoke to an industry expert on the fertilizer and specialty chemical sector, and 2-3 takeaways from that conversation is that the nitrogen-based fertilizers and the nitric acid, there is a genuine price increase which is happening. And some of the companies which could have positive rub-off because of that is Deepak Fertilizer and GNFC. While people are talking about the potash prices, having gone up because of the Israel-Palestinian issue, the fact of the matter is that in India, there are very few companies which have the capacity to manufacture. Yes, GSFC has a very small capacity, but the kind of price move that we are seeing today is not commensurate with the kind of capacity that they have. So it would be good to avoid that. But in terms of specialty chemicals, companies like Navin Fluorine, Deepak Nitrite, SRF, the prices are bottoming out. So the worst seems to be over and has already been factored in. Maybe quarterly numbers may not be that great. But from here on, specialty chemical as a sector should do reasonably well.
All right, specialty chemicals as a sector should do reasonably well. I was just looking at a bunch of these textile names. They're spiking. Gokaldas Exports, for instance, Hemang is up around 11 odd %. We're seeing a decent move come by on other names as well. But at the same time, a lot on the street are anticipating big positives coming in on account of the UK-India FTA, or the free trade agreement that would happen, or that is expected to happen towards the end of this month. Your thoughts on how would you play this theme? Who would be the bigger beneficiaries here? And how much of that is already in the price given the moves that we've seen in these stocks?
As far as UK-India bilateral treaty is concerned, maybe some of the textile companies and United Spirits could be a big beneficiary, because a large component of the import that United Spirits does, there can be a certain amount of relief. So I think a good way to play this event is through United Spirits and maybe, some of the textile companies.
I mean, yeah, that's that is one of the contentious kind of issues, which was the reason why, I mean, the alcohol issue, where the last time it did not happen. So it's one of the contentious issues. But this time, hopefully by the end of the month, at least that's the buzz. Parikshit also reported on this on Friday. We'll get something sort of
just a word on the alcohol bit itself.
Yeah.
We did have Hina Nagarajan say that were this to happen in the way they are anticipating, it could improve or it could impact their costs by about 300 to 700 basis points, depending on the product or the nature of the product. So what they would do is they would immediately pass it on to the consumers. That would be a positive in terms of their volumes. However, the only worry is this 300 to 700 basis points that they are saving in tax. Will that be undone by a similar amount of increase in the state taxes? If that happens, then the companies, instead of paying it to the central government, will now have to pay to the state government, and things remain status quo. So that's a big risk.
Absolutely. We'll see. There's another one, Mangalam. You were talking about textile companies, House of Pearl Fashion, right? PGIL. I mean, it's just coming up on my screen. It's up some 13%. Okay, yeah. There's PGIL. I mean, I don't know if you can pull that up, but it's got decent sized volumes. 1300 plus is where 1310. I'm not sure if this is also on the back of the sort of FTA buzz, but that's...
Pearl Global Industries, is that what you're talking about? PGIL.
PGIL, yeah. Yeah.
Never heard of this name, I'll be very honest.
Yeah.
And the stock actually has rallied quite a bit from 400 at the start of this year to close around 1300. Three times move. It's in the ASM stage 1 and 2,800 crore market cap.
200% this year. So
there you have it, Pearl Global Industries.
Pearl Global, yeah. That's the one we're talking about. Well, that's textiles for you, but let's talk about the railway space. Texmaco Rail and Engineering is also doing very well. They posted a good set of numbers for the second quarter. And they've also announced a demerger of their rail and green energy infrastructure business. Earlier today, we spoke with the management. The CFO of the company was with us in the program. Listen into some of that commentary.
This division mainly caters to our EPC segments, that is for track laying, signaling, telecommunication, a bit of hydromechanical, and the railway bridges that we cater to. On an average, you see that the turnover has been in the range of around 550 to 600 crore if you see the past trend. So we expect that it would be ranging in the same level as of now. If you see on a consolidated basis, we have an order book of around 7,800 crores as of date, of which heavy engineering and steel foundry comprise of around 5,600. Our rail EPC, that is Kalindi and Bright Power, as of today is around 1,700. Joint venture and various subsidiaries around 500. Right now, we are at the run rate of around 600 or just over 600. Our target is to go up to 750 or 800 by end of this year. And by mid of next year, we should hit the number of 1K wagon per month. That's our objective.
All right, so that's the word coming in from Texmaco Rail. Just keep an eye out on Cochin Shipyard before we slip into that short break. A big spike is what we're seeing on Cochin Shipyard for most part of today's trading session. In fact, up until now, the stock was absolutely flat. And there you have a big vertical rally out there. Take a short break, come back, get you more on the markets and individual stocks. On the other side, we'll also be joined by Anshul Sehgal from Kotak PMS.
Welcome back. PSU Bank just pulled that stock up. It reported numbers a while back, and the stock is now reacting favorably, 2.5% higher on that. And just to quickly recap the numbers, the NII growth was 11.5%, profit jump was 48%. The asset quality is improved on a quarter-on-quarter basis. There was an initial spike post the numbers. It's cooled off a bit from those levels, but still up close to about 2.5% post its Q2 performance. Let's talk about PVR Inox. That's the next one on our radar. This is after the company launches a subscription-based plan to watch movies called PVR Inox Passport. Shilpa joins in with the details. Shilpa.
Well, it's a monthly subscription pass that PVR Inox has launched called Passport that lets you watch 10 movies in a month for just $6.99, and this is between Monday to Thursday. Now, while this sounds interesting because it makes movies as cheap as just like 69 rupees a movie in a month, it comes with a lot of riders. Now, for instance, you can only watch one movie at a time. This is a non-transferable pass. One movie a day is all that you can watch between Monday to Thursday, and national holidays are not included in that. And you can buy the subscription pass only on the PVR Inox website or app. And the ticket pricing is also capped at 350. So it's free only until the ticket is priced up to 350. Beyond that, you will have to pay over and above. And this also does not include, premium offering screens like the IMAX, Gold, Lux, Director's Cut, and even in terms of seats. While you can book all of them, recliner seats, which are usually the more expensive ones, are also not included. And more importantly, this has only been launched in the north and the west markets, and it has not been launched in any of the 5 southern states, including also some other cities like Chandigarh and Puducherry as well. And this is a limited period program, meaning only 20,000 passes will be issued, and then the company will look at how it wants to extend it further. In fact, I spoke to PVR Inox's co-CEO Gautam Datta on what the larger idea behind this is and what the strategy is. Listen in.
Programs such as this would really propel consumers to come out and watch more movies. Simple. The friction of travel and the friction of deciding on basis money just completely goes away. You can travel as much when it's about buffet versus an a la carte, exactly the same thing. We felt that a subscription at cinema is something which has not really been tried before, and we wanted to draw out a pilot, an experiment to see how people warm up to this product, and that was largely the genesis of this program. We felt 20,000 would give us a good idea of how the consumption pattern would change or alter. And we wanted to take that piece in, then give a gap for at least 4 to 6 weeks, and then come out with a bigger national rollout. So on a weekday, we are closer to about 24% occupancy. Weekends are about 41% occupancy. So typically we are looking at increasing the occupancy over weekdays, and that's really the focus of this product.
That'll be very interesting how it goes, because Prashant, 699 rupees per month, no movies in South India, no movies on weekends, no movies on public holidays, no movies where ticket prices are upwards of 350 rupees, no premium offerings, and only 20,000 subscriptions to be first rollout. Are you a taker?
No, because it's a Monday to Thursday, but I guess it will also drive some F&B revenues for them, right? So and the break-even is probably just 2 or 3 movies a month.
Yeah, but I was just, doing some math out here. 20,000 people, they pay 699 rupees. That's just about 1.4 crore rupees per month in terms of revenue. Each of them, assuming all of them watch one movie every week and spend 250 rupees, which is the average spend per head on F&B there, that is 1,000 rupees per person per month. That would make it around 2.5 to 3 crores in terms of total revenue. That includes the monthly subscription fee. 3 crore rupees per month is 35 crore rupees for per quarter for PVR.
But anyway, they're running at 24% occupancy, right?
Any more than that, 20,000. Even if they increase it,
money.
It is bonus money, but how much of that comes? And this is assuming full purchase of this.
But I'm just thinking, can it work in a negative way?
Yeah.
Because I mean, if you know that for $700 you're getting you can watch movies over the weekend, Suddenly, if for the weekend you want to go watch a movie and the price is whatever, 800 rupees, 1000 rupees. I mean, you know, your mind gets anchored to, well, I can catch that movie for whatever price during the weekend. Why should I pay such a, I don't know. I mean,
that's a fair point. In fact,
so I think that is the reason why, as they said, they're rolling this out
as a pilot
pilot kind of a thing. They'll see, I guess, you know, the data, etc., as it comes in. How these people behaving in terms of what the FNB is, 250, maybe it's higher. We don't know. And then maybe decide to roll it out or not.
One thing is for sure, it's given them a lot more publicity than the kind of revenue that they get.
Trying something
full marks
new,
for trying something new, yes.
By the way, I saw Oppenheimer 3 times, right? I'm the perfect candidate, but I saw it over the weekend.
Oppenheimer was upwards of 350 rupees per ticket. You're not eligible for that, sir.
No, I remember
Oppenheimer, even a month later, was so expensive.
Yeah. No, I paid, I'm not joking, I paid, the first one was $250. I saw the show, it was 7 in the morning.
Okay.
And I didn't pay, you know, expensive, under 500 rupees. But yeah, the limit is 350 per ticket, so one will have to see.
Let's see how that goes about. Hemang, your thoughts on PVR? I mean, movies have come back and PVR also has seen a bit of a recovery from the lows now. And with the content pipeline, all of this is looking good. Do you think this announcement is material in your thesis for PVR?
So the announcement looks very interesting. They're trying to address the occupancy, level because typically weekdays you see that the occupancy levels are much lesser, and the college-going crowd or the senior citizens where the price sensitivity is very high. They're trying to see if this kind of a initiative will work. In terms of absolute impact, it may not be big, but if you see some improvement in the occupancy, surely people would want to explore that given the onslaught of OTT which we are witnessing right now.
Okay, all right, Hemang, we'll leave it there. Thank you very much for your time. Good speaking with you. And it's a pleasure. Well, our Alpha Manager of the day is with us. Anshul Sehgal of Kotak PMS is now joining in. Anshul, good to have you with us here. Thank you very much for your time. We were just talking about this PVR issue. Any thoughts? Have you spent time thinking about this one in terms of how it would play out?
Honestly, I'm hearing it from you just now, Prashant. I had no clue that this was happening, and so okay. I haven't put my mind to it. But Monday to Thursday looks not too exciting for me. I assume that there will be takers for it in that period, but not for me. So haven't put my mind to it too much.
Maybe college kids, right? I mean, youngsters and so on and so forth.
Senior citizens, housewives, people sitting at homes.
Absolutely. Anshul, any thoughts on the market per se in what it's doing, which is nothing, at least on the index level, absolutely flat. Your thoughts?
Yeah, Prashant, two things. One is that clearly this period has told us that it's actually futile to be predicting the markets. As you're well aware, sometime around March, people were circumspect. Anybody you spoke with, I would say out of 10, 9 people were circumspect, and we've seen what's happened with the markets. The small and mid-cap indices have run up over 30% in the last 6 months. And clearly, they've surprised the markets on the upside. The second thing is that with this rally in the small and mid-caps, large caps have relatively become favorably valued as compared to small and mid-caps. And so it would be prudent to take some monies off the table and shift them towards large caps, at least for portfolio managers who are judged on a year-on-year basis. For individuals who are investing for their own capital, that is, they're investing their own capital. For them, it's okay if they have a 3-5 year time horizon to invest their monies and hold this rally. On the other hand, we do see that there is sector rotation that is happening, and there are opportunities which are stock-specific, sector-specific across the markets even today, despite the rally that we have seen in the markets. So this is an interesting market, not so much a buy anything at any price kind of a market, but a much more stock-specific bottom-up market from here to the next 6 to 12 months.
Anshul, one can't buy anything in this market. So can you share some good themes, interesting themes that you have identified in the last, say, 2 or 3 months?
Hi, Rima. I think that this is a market where over the last, I'd say 5 to 7 years, pharma has done nothing. And we see that between now and the next 2 to 3 years, pharma in terms of risk reward looks quite interesting. And within pharma, we would look at exporters to the world from India. And so we think that that space looks interesting. Valuations are attractive. Prices are rock bottom, that is of generics in the US. There is room for prices to at least stabilize, not go down any further from here, and for volumes to move up, which should be good for the stock prices. Then there are, slightly smaller sectors like real estate, where there are opportunities, sectors like sugar and ethanol, where we see tremendous opportunity at this time. In addition to that, even within larger sectors like IT and financials, there are opportunities which are off the beaten track, and where if you can do some work, identify really money-making opportunities in the next 6 to 12 months. So there are opportunities, but it's not so easy to make money anymore.
Well, it's never easy to make money, Anshul. Relatively getting even tougher now, you say. There was an interesting development that took place in Laurus Labs, where one of their associates actually went ahead and got an approval for one of their cancer treatment drugs. The price of that treatment was 3 to 4 odd crores. Now, with this coming by, the average price declines to about 10% of that. And they believe that they can scale this business up by 6 times. And as a result of which, they can also reduce the price further to about 20 lakh odd rupees. But Anshul likes the ones that actually make in India and supply to the world. Your thoughts on financials? I remember you liking financials. We had numbers coming in from Federal Bank, Bank of Maharashtra, Karur Vysya Bank as well. How are you, how is your opinion poised in financials right now when it comes to large cap private banks, mid cap private banks, public sector banks and NBFCs?
Mangalam, that's a very interesting question, I must mention, because the large caps have really done very well in the last, say, 2 odd years. And some of them have been seriously re-rated in this period. There are others which were doing very well prior to that, that is in the times of COVID and before that. And those have kind of stagnated as we speak. In the last, say, 3 odd years, many of these banks have given no returns. So amongst the private sector large cap banks, we see relative valuation interest returning to some of those banks which have done nothing over the last 3 years, and waning from some of those banks which have done well in the last 2 years. That's how we see this, because ownership patterns have changed. One is that. Second is, amongst the old private sector banks, we see that there is somewhat of a hangover of past sort of valuations, which is still plaguing these names. While their earnings have rebounded, valuations have gone nowhere. And many of these old private sector banks trade under one-time book for ROAs, which are quite attractive at this time, in the region of 1.4 to 1.6 times. And on price to earnings basis, they trade at as low as 4 to 5 times. We see interest coming here because there is limited ownership in these names. NBFCs, we think that housing finance, NBFCs, some of those are quite attractively valued, and there the NPA cycle is peaking out. NPAs are coming off, which is why earnings will rebound, and that's not priced in yet. So we do find opportunity there as well. There is opportunity in the markets, as I said, but you'll have to do a little bit of work, dig deeper, look for arbitrages on expectations, and there will be money made.
You have any of these textile names in your portfolio, Anshul?
Honestly, nothing just now, Prashant, but that is another space where we think that opportunity will arise in the next 6 to 12 months. We think that cotton prices have been steady. They've been in a range of 60,000 rupees odd over the last, say, 6 to 12 months. We think that if prices remain here and the yarn spread widens, in India, there will be opportunity from yarn particularly, as also from garmenting. So there will be opportunity in the next 6 to 12 months, even in this space.
All right. And of course, there is the India-UK FTA. I don't want to jinx it, but let's just hope it gets done. But that's only towards the end of the month. So another big potential opportunity. I mean, right now, Bangladesh and China are the big exporters of textile apparel, all sorts of textiles to the UK. And of course, I mean, to the US, etc. as well. And the hope is with the FTA coming in, maybe, that also gets a big boost out of India. Thanks very much, Anshul. Great speaking with you. Appreciate you joining in, and always a pleasure having you here on CNBC TV18. Well, in some good news which came through earlier, we had the cricket T20, which actually is now part of the Olympics from 2028. This is, of course, coming as a, not as a surprise. You heard it first here on CNBC TV18 with, Shireen speaking with the International Olympics Organization, the head of the committee. And at that point, he had basically said that it is one of the proposals which has come through and which is under consideration. And now this has come through. Listen in from Mrs. Neeta Ambani, the chairperson of the Reliance Foundation, on this development.
Historic moment for India as cricket is finally a part of the Olympics. Your initial reactions, first comments.
I think I'm so delighted. It's celebrations, I think. And this means a lot, not only for the 1.4 billion Indians, but I think everybody in South Asia. I think Olympics will now have a deeper engagement with all these countries in South Asia, like India, Afghanistan, Pakistan, Sri Lanka, Bangladesh. So very happy day. And it couldn't have come better. I mean, we are hosting the 141st Olympic session in Mumbai after 40 years. World Cup is being played in India. And this historic decision and voting went for it in India. So everything has come together.
Yeah.
And I think only good things.
So what were the kind of conversations that you've had with IOC to make this happen, also with the LA 2028 team as well?
So this has been going on for the last 4 years. We've had so many discussions and deliberations about having cricket as an Olympic sport. And finally, the historic decision had to be made today in Mumbai. So I'm just very happy.
Yeah. And in general, Reliance has worked extensively with different kinds of sports apart from cricket. And during the inauguration of the 141st IOC session, which happened on Saturday, Prime Minister Narendra Modi also expressed his intention to host the Youth Olympics as well as the 2036 Olympics. What is the kind of infrastructure? Sports is becoming popular in country, but what is the kind of infrastructure or how will Reliance work with the government to make a successful, play at Youth Olympics and the 2036 Olympics?
I think not only Reliance, I think many corporates are going to kind of help in this endeavor. If we win the bid for 2030 Youth Olympics or 2036 Summer Olympics, I think it's a coming together of everyone for this dream for Indian children.
Welcome back. Watch out for a couple of these stocks which have been on a tear ever since the last couple of months or so. ITI is one of them. This year it's up almost 200% and now it's up around 8%. Very low public float. So any move on this is exaggerated on either side, and this time around it's on the way up. This month it's up nearly 45%. The other one is Kohinoor Foods. That's locked in a 10% upper circuit as well. So that's something that we are eyeing. Apart from the fertilizer stocks, GNFC is the other one which has moved higher too. But we're talking about numbers here, and Bajaj Finance will be reporting their numbers tomorrow. Ritu joins in with the key expectations. Ritu.
Well, Bajaj Finance is seen reporting a mixed sort of numbers come tomorrow. Sequentially, profit growth could be muted or flat. Now, our poll shows that profit could come in at 3,616 crore rupees compared to about 2,780 crores in the same period last year, which would translate to a 30% growth YOY. The net interest income, the core income of the lender, is seen growing by almost 30% over the previous year and 7% sequentially to 7,208 crore rupees as per our poll. Now, in the business updates that Bajaj Finance has given, it said that it registered an AUM growth of almost 33%, and that's the best growth it has had in 15 quarters when you look at the year-on-year numbers. The deposits growth was very healthy, almost 39% year-on-year at 54,800 crore rupees, and the customer base was up 22% over the previous year and about 5% sequentially. The not so good part of the numbers that were disclosed were the new loan dispersals, which had fallen over the previous quarter, down by about 14% to 85 lakhs. Liquidity in the balance sheet was also down by about 10% sequentially, and the cross-sell rate had come down to a 9-quarter low. Now, in terms of what the street is going to be watching out for in the numbers, one, of course, is margins, a running theme that we've seen across banks and NBFCs. The street is expecting a decline of 30 basis points year-on-year and 20 basis points sequentially in Bajaj Finance's numbers. Asset quality, again, which is what we've seen in many of the lenders that have already reported, could see some improvement, and provisions are expected to remain under control. Any commentary from the management on the future outlook, of course, we'll watch out for. Also, any comments on that billion-dollar mega fundraise, which, remember, the board has approved, and the EGM is now on the 31st of October to seek shareholders' nod. All right,
Ritu, thanks very much for that. So we'll see Bajaj Finance as the numbers come in. But of course, I mean, before that, we'll get numbers from HDFC Bank, and we are awaiting those numbers. In the next an hour or so is when we should have them. Mitesh is with us to tell us what to buy or sell today for a reverse trade tomorrow. Mitesh, what do you have?
Prashant, I have one buy and one sell side trade. DVs, I think, is breaking down, so we'll take a STBT there. Keep a stop above levels of 36.83 and a target of 36.25 can be looked at. And Aditya Birla Fashions, or ABFRL as we know it, that's a BTST with a stop at 224.5 for a target of 233.
Mitesh, just if you can pull up the chart of BL Kashyap, if you can. Is doing well in a down market. It's done well this year, but what hasn't done well this year? I mean, it's basically back at 2017 levels. The all-time high, I think, was back in the day in 2007, but it's seen a pretty large move, and it's now trying to take out the 2017 levels here. Any thoughts on this one?
So, Prashant, I've been tracking the stock for some time now. The long-term charts are very, very positive. And as you rightly highlighted, it's just about to take those highs which it made in November of 2017, which was around 72 rupees. And now the stock is just about that. Broadly, I think the stock has a lot of potential. And I think the stock can even go to about levels of 115 to about 120 to begin with. Maybe even higher levels, but that is what I'm looking at if you give it about 3-4 months of time. So very, very positive. The only thing is that if it gets some profit booking around this pivot of 72, 72.5, then you might want to, you might be able to buy it lower at about 60, 65 odd zone. So my idea would be to buy partly now, in case you get a decline, add more and keep a stop below 50. I think this is heading towards 115, 120 if you give it about 4 or 5 months from here.
Okay, thank you very much for that. Let's move on then. Hero MotoCorp is one of the big movers today. And this is an exclusive conversation with CNBC-TV18's Parikshit Luthra, where he chatted with the management, and they revealed that the company may not hike prices significantly in the near future. They also ruled out acquisition of an EV player, Ather. Listen in.
If you take, let's say, India inflation, The inflation in India has been close to around 6%, yeah, broadly, give or take. Our price hike over the last 4 quarters would also be in that vicinity, yeah. So therefore, it generally mirrors, has mirrored that. The last quarter hike was very marginal. It was, I think, around 1%, less than 1%. So I think the market can absorb such marginal hikes, that what we have seen. The commodities have by and large stabilized, I would say. And therefore, from here on, the need for any significant price hike would be less, I would say.
So no more price hikes in the offing,
at least for this year? What I'm saying is that we keep looking at prices not just based on inflation, but also based on our product positioning. For instance, we keep upgrading our products, like we put in X-Tech variants. So it's more a product market fit that will drive, is what we feel. We don't see significant inflationary pressures driving the pricing up. So moving forward, probably you could assume that any price changes should be of a lesser magnitude than in the past, so and should be easily absorbed by the market. That's what I would say.
Right. Now, what would be your priorities for the remaining part of this fiscal? You've had some big ticket launches.
Yeah.
You have the Vida portfolio as well.
Yeah.
What are your priorities going to be for the remaining part of the year?
See, I'll tell you, first, obviously, to ensure that it's a good festive, strong festive. And we are all confident about that. We are geared for that. As we move forward, I take more medium term, let's say 4 to 8 quarters, yeah, is what we call. One, of course, are the core, which is the entry segment, dealer segment. We still feel that there's a lot of headroom to get people in, to make sure that there are wheels in every home, every household.
You increased your stake in Ather.
Yep.
Where does it stand currently? 550 crores that went from Hero MotoCorp.
Yeah.
This was a strategic investment.
Yes.
What does it really go towards building?
So this is basically any of the players, obviously they need to keep raising money, whether it is on their products, which is the product development, or the operational P&L, which is there because for EV companies, the operational P&L are still not positive. All of us know that. So it's a combination of the entire business growth towards which it goes in terms of the money that they raise. We have continued to support Ather, we continue to back that because we believe that it's not about, it's more about building the category. And right now the EV category needs to be built up and there's space for a good number of 2-3 strong premium brands. And Ather has done well in that direction. Our stake currently stands at around 37.5% as far as Ather is concerned. And that's what, in terms of, when we say strategic, obviously we don't treat it as a financial investment, but we are looking at Ather from a medium to long-term point of view.
Okay, and there's always been talk of buying a bigger share, maybe acquiring Ather as a company. Would you rule that out sometime in future?
No, look, Parikshit, I mean, in a sense that Ather is doing well. We continue to support them with our advice. Both the companies have started working collaboratively on multiple directions as well. So I would say there is, as of now, there is actually, we don't see a need to consider that or explore that. And obviously the board continues to take from time to time the necessary evaluation of all the investments as to what we should do, like any other listed company's board.
Right.
Whether you should hike up, whether you should go down, divest. Those are decisions that board keeps taking from time to time.
Welcome back. The Nifty slipped a bit in the last 10 minutes. We were holding at about 19,760 when we began the show. And in the last 20 minutes, we've seen the Nifty fall close to about 40 odd points. HUL has moved to the low point of the day, now down close to about 0.5%. It was in the green sometime back. Bharti Airtel has extended its loss down nearly 1%, while TCS continues to flounder a bit. That's down close to about 1.5%. Anand Tandon is with us now on the show. Anand, wanted to get your thoughts in on Tata Motors and the potential benefit from this monetization of the Tata Tech IPO, you know, the most awaited IPOs. Now, Tata Motors has about a 74% stake. They're paring down or selling 10% stake and getting $2 billion, which they will use to bring down their debt. But the stock hasn't reacted to this development. Do you think all the news surrounding this whole Tata Tech stake, monetization, the value it can add, is already priced in the Tata Motors share price?
Well, to some extent, I would imagine it is. So Tata Motors has been going up largely on the basis that you will be seeing a significant reduction in debt. And to the extent that this goes some way in terms of achieving their announced plans, it is certainly helpful. But it is not new news. So the real factor is that, from an operational perspective, has something changed? This is a capital allocation decision. And when you're looking at the stock market, you really want to see operational issues dominating rather than, things which are basis of capital allocation. That's the reason why we look at EBITDA. I don't think that there is anything in this that will impact that. As I said, to the extent that the capital will look a little better, it is certainly useful. And the fact that, the interest cost will come down, again, it is useful. But I don't think that is something which the market doesn't already know.
Right. Anand, your thoughts on, the kind of themes, the stocks that you like especially after the big run-up that we've seen in the mid and small cap end of things?
Well, last time that I was on your show, we were talking about looking at international markets. So let me tell you about a company called Stellantis. Since we just started with Tata Motors, here is a company which trades at 1.3 times EV to EBITDA, less than 3 times PE. And it is the owner of brands like Jeep and Chrysler. It has 42 marquee brands and has been growing at the rate of, at a significant clip over the last several years. When you look at that valuation and you look at what Tata Motors is looking at, you begin to see why a more global outlook looks very interesting. And that is the reason why I feel challenged in looking at Indian stocks, because when you're looking at international markets, it becomes extremely difficult to justify the kind of 30, 40 EV to EBITDA that most of the companies today are trading at. So I'm not really able to answer a question about why some of these companies look attractive.
So, Anand, so you bought Stellantis?
Well, I don't like to discuss my particular portfolio, but like I said, this is again, I would emphasize these are not recommendations. I'm just telling you a relative valuation. If you look at how Stellantis has come up, it is a merger of Chrysler and a few of the European companies. They have a solid backbone. Of course, the US market currently is facing a bit of an issue because of the fact that there is a strike going on. But assuming that that is temporary and will somewhat be fixed, and more importantly, Stellantis is not only based in the US, it also has European operations and so on, much like Tata Motors. The question is, would you be buying something which is at 7 times EV to EBITDA versus something which is at 1.3 times EV to EBITDA?
Anand, did you look at the Birkenstock offering? What are your thoughts there? Because it was offered at around $8.6 billion valuation. Now it's come down to around 7.5. That's about $1 billion. Birkenstock, it's a footwear company.
Right. No, I have not looked at that yet.
By the way, Yatra, which reported numbers just maybe at about 130, stock is suddenly nosedive, down close to about 3.5%. Pull up the Yatra Online Limited. There you have it. Sharp fall in Yatra. 4% gone now on that. Did you look at the numbers in closer details or not yet?
I did look at the numbers in closer details, but they're also the first quarter numbers, right? Yeah. So the important aspect to watch out for will be what happens in the second quarter and thereafter. And more importantly, post this festive season, Cricket World Cup sort of hype that everyone has about travel. The question is, are these numbers the peak numbers, or will it look even better going forward.
Right now, at least the stock is trading pretty close to its issue price. I think the issue price was 142. Anand, had a look at Federal Bank's numbers. What did you make of it?
So, again, I would rather talk in slightly more general terms. That's a bank that has been doing reasonably well and has also done reasonably well in terms of the prices. So it's not as if the market has not rewarded it, though it has been a little while doing that. If you look at where we are placed today, the Federal Bank advantage is that it does get a lot of remittances from overseas because of the location that it's headquartered in. And, to that extent, therefore, they are cushioned somewhat in terms of their liabilities. The recent analyst issues in terms of whether or not the credit cycle is beginning to become a little sour as far as the retail lending is concerned, I think is a caution that needs to be well taken. To the extent, again, that Federal Bank is technologically one of the better banks, I think it is, reasonably a good position to be in. So if you are looking for a mid-sized bank, which is reasonably well managed in a space where liabilities will not become a problem, I think that's a company which is, fairly well positioned. But if you are looking for something which will be able to withstand stocks, again, I would recommend that one look at larger companies because you are getting into a lot more uncertain world, and being able to handle shocks is one of the key issues that you should be aware of.
Okay, all right, Anand, we'll leave it there. Thank you very much for your time. Quick conversation today. Thank you for joining in. Well, we got, 30 points cut on the Nifty. We'll end with that, 19,722. But bulk of the day was spent basically just in a holding pattern. Nothing really going on, at least at the index level. By close, I mean, the market breadth also closed in 1,200 stocks higher, 1,120 stocks lower. So the gap was not that much. It was about 2:1 comfortably till about mid-afternoon or so. And if you want to take a look at, I think the mid and the small cap part of the market did much better. Bank Nifty also nothing. Let me just take a look at the mid cap index gave up gains, just about 0.14% higher. And the small cap index also gave up gains. It was up 0.5, 0.6 when we started at 230. It ends about 0.4% up in the green at this point by close. Gainers in the form of, Hero, the steel names did well, ONGC did well, losses coming through in